Okay, so BlackRock just did something for the first time in 2 months, and nobody's talking about what it actually means. BlackRock's Bitcoin ETF, the IBIT, has been dumping roughly $300 to $500 million a day since mid-November. That's $60 billion in outflows over 8 weeks. Institutional capitulation, the kind of thing that usually means more pain ahead. But yesterday, something changed. The outflow broke. For the first time in 56 days, the IBIT saw inflows instead. $300 million came back in. The daily dump, the thing that's been relentless for 2 months straight, dropped to single digits. That's a flip. And here's where most people miss it. This isn't a headline. This isn't an announcement. This is follow the money data. This is what institutions actually do when they finish selling and start buying again. James from Invest Answers caught it. And he's right. This matters because it answers a specific question. Did BlackRock dump the IBIT because they lost conviction in Bitcoin? Or did they dump it because the price was still too high and they were waiting for capitulation? The answer is becoming clear. When an institution that size reverses a 2-month dump, it's not a coincidence. It's not noise, it's a signal. It means someone, probably multiple someones, looked at the chart, looked at the macro setup, and decided that Bitcoin at $62,900 is different than Bitcoin at $70,000. The bearish case for the last 2 months was clean. Institutional money was exiting. The narrative was, if BlackRock is selling, who's buying? And the price followed that logic down. Bitcoin dominance is still at 55%, which is actually pretty low. The fear and greed index is at 23, extreme fear territory. That's the backdrop you sell into. But here's the thing nobody's modeling correctly. Institutions don't panic sell. They don't dump $60 billion and then go quiet for a press release. They dump it methodically because they're rotating, they're testing, they're waiting to see where the bottom is. When the dumps slow down and reverse, it means they found it. Now the question is, what changed yesterday versus Tuesday? The macro didn't flip overnight. The Fed didn't pivot. Rates are still at 448 on the 10-year. Crude is still at $72. The S&P is flat. Nothing happened in the real economy that would justify a sudden reversal. So it's not macro, it's positioning. What likely happened is someone at BlackRock, Fidelity, or another major institutional player modeled out what happens if Bitcoin continues down another 10, 15, 20% and decided we're not waiting. This is the entry point, and they bought. And if they bought, the people watching the flows saw it, and now it's becoming real. This is how institutional money actually moves. It's not dramatic, it's not a single trade. It's a reversal in the daily flow pattern. It's the smallest dump in 8 weeks. It's $300 million of fresh inflows. The retail narrative right now is institutions are coming back. Bullish. Moon. But the actual position is more granular. Institutions found a price they liked. They're not marching back in. They're buying selectively at what they think is capitulation, which is exactly what you'd want to see if you were trying to bottom a 2-month sell-off. The weird part, the part that's actually worth watching, is whether this holds. One day of inflows could be a dead cat bounce. It could be a retest before another leg down. But if the daily dumps stay small, if the 3-day average stays positive, if we see another inflow day in the next 48 hours, that's when you know it's real. That's when you know the institutional bear trap is over. So here's what I'm actually watching the next 4 trading days. If the IBIT stays green or holds flat, the reversal is real. If we see dumps go back to 400, 500 million a day, then yesterday was noise. What do you think it is? Are you hedging for more downside, or did yesterday change your model? Drop a comment. If you want more of this follow the money analysis, the data nobody else is reading, subscribe. This is the kind of pattern that moves first and the headlines catch up 3 days later. And speaking of institutions doing unexpected things, there's a Chinese robotics company that just started mass-producing full-size humanoid robots, while Elon's still posting renderings of Tesla bot on Twitter. The reported specs are frankly ahead of what anyone in the US is shipping. So you've got one company actually building and selling robots, and another company whose CEO spends 14 hours a day on social media talking about building robots. The market has opinions on which will matter more. We'll find out. Thanks for watching. If you want more of this every morning, subscribe, and I'll see you tomorrow.